California's wildfires cost insurance companies billions of dollars. But there are other reasons why big name insurers like State Farm and Allstate are refusing to write new homeowners policies here in the Golden State. On this Wired Wednesday, we are checking in with GV Wire's news director, Bill McEwen, for some answers. Bill, good morning. Thanks for joining us today. So are there other reasons other than wildfires for this happening with our insurance companies?
So it's inflation in the automobile parts is about 20%. So it's double the national rate of inflation. And in California, to raise a rate more than 7%, you have to have a public hearing. So automobile insurance writers have been losing 13 cents on every dollar recently.
Isn't this happening in other states too, though, if we're talking
No, California is unique because of Proposition 103.
Can you explain 103 a little bit more?
Yeah, so it was passed in 1988. It created the Office of the Insurance Commissioner, and it's been successful in that, California is known for high expenses, but when it's come to homeowners and car insurance, California's had has had really good rates. But now, because of the wildfires, insurers, they base the rates on basically over a 20-year time catastrophic model, which is what we do for earthquake insurance, but they're not allowed to do that for fire events.
Okay.
So basically, they can't afford to write fire insurance because half of the state is considered high risk, and that's why State Farm and Allstate are not writing new policies.
But if you already have one, that's still
you're okay there. I think a good way for us to get into it is to say, if you watch Fox Entertainment or the NFL, you see really funny commercials from Allstate or from State Farm and Progressive. And yet, if you're in California and you wanted to start up with them, probably not going to be able to do it.
Well then, okay, is there a fix to this? I mean, because there are a lot of people still want to live in their beautiful mountain communities, and that where they are more prone to fire in that area, they want to have some sort of insurance. Is there any fix to this?
So the fix would be that the lawmakers, state legislators, adjust Proposition 103 and allow these insurers to make the changes that are needed and allow them to do it in timely fashion. I think when Prop 103 was written at the time, it was perfect, but life changes, the market changes, and because of climate change, conditions have changed here. So with some modifications, this could work again, and we could bring these major insurers back into the market.
All right, so that's a good point. We should all contact our legislators who can help maybe make some of the changes. I'd like to go back to the car insurance for a moment. We've got a graphic that shows some numbers that are kind of like in your face, I suppose, on what's going on. So is the same go for our, auto insurance? Do we need to talk to our legislators, or what can we do with that?
Yeah, that would be the same situation. Prop 103 has so much bureaucracy. It's just a lag time, and insurers need to be able to adjust their rates in a much quicker fashion. And like I said, Prop 103 has worked wonderfully for California until recent events. And now, obviously, it's not working so well at all. And I think if people viewing this show send an email to their assemblyman, their state senator, and make this top of mind. Certainly the lawmakers are aware of it, but thus far they haven't really been working on solutions for it. And it never hurts to write to the office of Governor Gavin Newsom also.
That's a good point. I guess if there is really truly misery amidst company, at least we know that people in Michigan, New York, and Nevada are also paying pretty high premiums for their car insurance. Bill McEwen, thank you so much from GV Wire joining us. We really appreciate it.
Thank you.
Great day. We'll be right back.